In this video, I want to go over zone to zone trading, or grid trading as some people call it. And the reason that this is important is because you'll understand how to kind of section off the markets and know where to find your points of interest in the market, almost regardless of what strategy you trade. This is going to be something that's going to be a key component to it, because that way you'll know how to confirm, the entry that you're trading based off the strategy that you're trading. So a couple things that go into zone trading is that price must react to the zone. And then price has a history of respecting that price area. So a zone is just basically like an area in the market to where price is going to have some sort of reaction from, or people are going to come in to sell or buy from that zone, because it has a history of doing that. So when you're looking at zones, you want to look for, the more a price respects it, the stronger. And then when it takes, like, every zone gets broken, but you want, when a good zone is broken, it takes a strong candle to break it. So these are sort of like the, I guess, guidelines when it comes to trading a zone. Price must react to the zone. It must have a history, and the more price reacts, the stronger. And when a good trend is broken, it takes, a strong candle to break it. It takes a strong candle to break it. Now, the other thing that likes to pop up at zones is candlestick patterns show up often. So what are candlestick patterns? Dojis, vectors, and I'm just going to focus on dojis, vectors, railroads. I'm just going to focus on these four, and engulfing candles. And then the idea of zone to zone trading is trading with the trend on breaks and retest of the zone. So this is basically your I guess, guideline to zone trading. So price must react, has a history, the more the better. It takes a strong candle, and then candlesticks patterns show up often in the area. So let's go identify a zone first. So that's what we're going to do first. We're going to look for price to react to a zone, and have a history of respecting. One sec. There we go. All right. So first, we look for price to react to an area and find where price has a history. So we're going to go down, So EuroCAD, and we're just going to kind of bring this together a little bit. And if you're looking for, if this is a little bit too confusing for you, what you can always do is you can go to the line chart and look for points of interest with the line chart. It's going to be kind of less noise to go off of. So the very first one that pops up to me is this area here. This area here. And if I was to kind of outline, you got this, that's a strong move, so that counts too. That. So you have all these areas. That circle doesn't count. That was a mistake. So you have all these areas where price had a reaction from, whether it was, and it doesn't have to be perfectly on the spot. So like I would even include this little reaction here because it was in the area. So when you're looking, and that's what you're looking for. So if we were to kind of measure that out, not measure it out, but mark it up, it would look like that. Make sure it's straight. There we go. The second area that draws interest to me is this area here. It'll be this area here. So if I mark up my reactions to that area, it would be this one, this whole little thing right here, and that break and retest of it, this whole thing, and then this counts too. Because remember, it's an area. Like don't get hung up on the line. I'm just kind of showing you the line because that's the center of the area, but the area going to encompass this. That would be the area. And then one more. I'm just going to do the area just to make it quicker. Would be this one here. Now, you found where price respects a lot. Now, if these areas are good areas, if I go backwards in the market, then they're going to show up multiple times as price reacting to it. So if I go back, let's see what happens. Look at that right there. You have this right here. Got this up here. That small break and retest there. Break and retest here. Then here. Have some consolidation. And up here, that's a clean one. That's another clean one here. So it's going to continue to respect that area. Break and retest here. And then another one here. Reaction, not a break and retest. So that's what you want to see if you pick a good zone. You want to see other areas, even like after you marked it up, to where if you go back to where you couldn't have seen it originally, like we're over here at first, and I go back and I still find common areas, then I know that's a good area. So now you know kind of the strength of an area. So let me go back to the candlesticks. See, it's much easier to find them when you're doing the line charts. And once you get good, you can, find it with the candlesticks or whatever type of chart that you use. But that's the gist of it there. Now, what we're going to do is, and this is kind of a good area that is doing this right now on EuroCAD, because all we're looking for is all we're looking for is zones that are breaking and retesting. So basically, because you're going to have an impulse. So what I mean by breaking is an impulse like this, where the candle breaks it. See how that was a strong candle that broke that zone? That's a good sign for me. Comes back to that zone and it corrects. So this little coming back part is a correction. Now, sometimes it doesn't have to reach the entire other part of the zone to start to correct. It could do something to where it goes like halfway, like this one, impulses, corrects, and then continues forward. Or even a small one like this one has a small impulse, but a smaller correction, but it still continues forward. So what you're looking for is exactly that. Now, another danger, like a danger of doing zone to zone trading, is maybe looking for too many zones, because I could take that right there and it could be a minor zone, but you see how price has weaker reactions to that area, weaker reactions, and it's a smaller zone in the middle of two major zones. So when you're new, don't look at the smaller zones. That was a smaller zone because it just had a couple reactions, but most of the time prices, like even the breaks and retests, are small. Like you got that small one, then you have that little small one, but it fails and stuff like that. Like, so that zone can confuse you. So I wouldn't focus on that until you really understand your zones. So how do you look at the market when you have your zones like this? Well, it's like a grid. If you're jumping through a ceiling, if you're jumping to a ceiling, you're going to hit your head. If you fall down from a ledge or a higher place, you're going to hit the ground, and that ground is going to be an offer of support. But say that ground, you were strong enough to break past the ground and go down to the next level of the building. Say it's a multi-story building, then what was the ground that you just fell through on the next floor below is now your ceiling. So that's going to form like a reversal zone. So when you're looking at it, to go to the live market, and price is giving us a great example right here. Price was in this zone. So to highlight it, price was in this zone. That zone right there. All you're looking for is for price to tell you where it wants to go. Either it's going to go down like that, and then correction, and go down to the next zone, or let me see if I can find a zone real quick above it. Here we go. Or it's going to go up and then correct to the zone that it just broke and then continue on to the next zone. There we go. That looks better. Continue on to the next zone. Yeah. So either go up like this or go down like that. So all you're waiting for, you don't have to be a market analyst and predict the markets. You're just reacting to what the markets is doing. So all you're looking for is, breaks and retest of that zone, impulse, correction, whichever one. If you ever hear either one, it's usually the same thing: impulse, breaks and retest, impulse and correction. So you're either looking at that or that. And then let's say price comes down here. Say price comes down here, it comes. All you're looking for is your next move. So what does that look like? It's either going to look like this. Interesting. I didn't know you can not do that. Okay. Delete that. It's either going to look like this or go down to the next zone. And you're just waiting from the market to tell you where you're going. You're just following the market to see if I can find another zone. And just zoom out, go to a higher time frame. See if this makes sense. And it does. Got two. So you got this one here, a little bit higher. And then you have this one. All right. So you see now the markets start to make more sense because you have it sectioned off. So literally all you're looking for, like say the market comes down to here. Comes down, this horrible depiction of the market, but say the market comes down, you're in that area now. You're just waiting to see which way it's going to go. And you just want to make the market simple for you. So that's the idea of it. Now, the other parts is seeing, a good candle that breaks it. So to identify that, because we got the more respects part, that's what we were doing here, going backwards, seeing how many times it respects the strong zone. The other part is when it takes a strong candle to break it. So if I zoom back in, we're looking for strong candles to break the zone. And I'm gonna mark up the strong candles with squares. So look, got one right there, strong candle. There's a strong candle breaking the zone now. Strong candle that breaks this zone. Strong candle, like they're strong because their bodies are big and they don't have much dojis. So you see how if I take this away, this is a perfect example. So let's zoom in right on this candle. This is the perfect example of a strong candle. So this candle here, you see how it makes one move and it goes straight in that direction and there's hardly any doji. Like there's a small one, but you have to zoom in to see it. But there's no doji that's selling it back down. So it was a decisive buy candle. That was all buying, no selling. So when you see something like that, and that's the candle it takes to break the zone, then that's an even better sign for the zone that you're looking at, because that further validates the strength of that zone. That doesn't invalidate the strength. And this was something that I messed up a long time because I thought that if the zone was broken, depending on how it's broken, it can validate or invalidate the zone. So if it was weaker candles breaking that zone, like if it was a bunch of these candles right here, like if it was a bunch of dojis and they're just trickling up and that breaks the zone, then that may not be a good one. But if you see a strong candle like this breaking the zone, that's a good sign. So let's zoom back out, look for some more examples. Strong candle breaking the zone, another one right here. Strong candle to break the zone. That one. And even though this was a fake out, it took a strong candle to break it to fake you out. And we'll talk about fake outs in another video. But it took a strong candle to fake it out. But the candle that went back into the zone, was another strong candle. So that just makes this zone even that much better. Even though there was a fake out that happened there, it still took a strong candle to break it. So, and then just this last one as an example. Strong candle here. Oh, wrong one. Like they show up all over the place. Like you see how it just becomes repeated after a while. Strong candle, strong candle. Like I can literally just do this every pair, every chart, and this rule would apply. All right, so we get the point. The strong candles. So now, what's the other one to validate the strong zone? Candlestick patterns show up at the area often. Show up often in the area. So dojis, vectors, railroads, and engulfing candles. So I'm gonna just do a kind of a rundown of each one. So dojis, perfect example right here. Dojis are candles with small bodies and long wicks to both sides. Small bodies, but the wicks are longer than the body on both sides. Even though this one is a bigger body, this still counts as a doji because the doji was longer than the bodies on both sides. So that is a doji candle. Body, wick, the whole thing is a doji. So you see how that shows up in that area. Now, within these dojis, there is the other pattern, the vector. A vector always shows up with dojis. So if you see a bunch of dojis, there's a chance a vector can be there too. A vector, if we go back to that same example, a vector is just a string of wicks in the same direction. So a string of wicks. That's probably the better definition. A string of wicks. So a cluster of wicks. So this right here. And usually you want to start the vector at 3 or more wicks. So if there's 3 or more wicks rejecting an area or rejecting a common zone, that's a vector. So let's go find some other examples. Other examples of a vector. And with other thing with vectors too, here's a great one, is sometimes I like going down to 30-minute. I think, in my experience, that's where I've seen the most vectors. So on the 30-minute, maybe the 15, but I like sticking with the 30-minute. See, this is 1, 2, 3, 4, 5 wicks. That's a strong vector right there. Very strong vector. And what it lead to? It led to a huge move down. So these strong vectors signaled a huge move down. That was, let's measure that real quick. It was a 100 pip move down, signaled by those vectors. Especially, let's kind of dig into this a little bit deeper so you really understand. So you see how the wicks are majority longer on the top side than they are on the bottom side? So let's get the box out the way. So most of the longer wicks are on the same side. Really, all of them. That's longer, that's longer, that's longer, that's equal in length. So, and then that's longer. All of that is a great sign for a vector. When you see like the wicks on the same side, so what does this mean? That means that price, if you see a wick, that means price was there at one point. So at one point, this candle, oh, let me line that up correctly. It's not going to let me. Let me zoom out and see if it lets me. But anyway, let me just continue. I don't think it's going to let me do it. But you'll get the point. This candle looked like that at one point. This, I'm not just talking about this candle. TradingView won't let me just make a box on the edges. So this candle looked like that. And what happened was sellers came into the market and drove the candle back down to where it closed here. I slide that over. This candle at one point looked like this. It was a green candle. The sellers came back in, drove the market down to here. So that was another rejection of that area. So the market rejected that candle. This candle, at one point, looked like this. There was a point in that hour where that candle looked like that. It was a strong green candle. And then then the sellers came in and drove it down. So every time it keeps dragging this market up, the sellers come down and push it back down, and it's failing to reject that area. At one point, this candle looked exactly like this. It opened here and it looked exactly like that. And then the sellers really smacked the market down. That's what happens when you see a wick, whether it's buying or selling. It came down here, buyers bought, whatever. But the main thing is that it happened multiple times in the same area. And that's what a vector is. The other one would be a railroad. Now, railroads more so definitely show up on 30 minutes than they do on hours. But a railroad, let me see if I can find one real quick. This is probably the best example here. But let me show you. So a railroad basically is one candle in one direction, followed immediately by a candle of around the equal length in the opposite direction. So it can look like that, or like on your charts, I use white for my red. I don't like using red candles. Or it could look like that. So then you have the buyer's railroad. The buyer's railroad looks like this. Buyer's railroad looks like that. So what is this saying? I like it especially when it's like this. Let me slide that up. Let me do this. So the market's coming down. The market's coming up. Market's coming up. Makes a final push. Hits a zone. So it's usually a zone up here. Hits a zone. And then it makes a equal or relatively equal push in the opposite direction. That's a railroad. It kind of looks like railroad tracks. Same thing with this one. Price is coming down. That's when a railroad is really good. You see the price coming down to it, makes a red candle here, hits a zone, closes, and then a green candle, the opposite, comes up. Price usually goes up like that, and then for the selling one, price will continue like that. That's what a railroad would look like. So a railroad, see, here we go. That's probably the closest. And then they're not going to always be wickless like this. Sometimes they'll show wicks. So like this example is going to have a little bit of a wick. Oh, there we go. Right when I find one, I find a better one. There we go. So price has majority been coming up to this area. So price was coming up. This is the railroad here, by the way. That's the railroad. So price was coming up to this area. It hit the zone. You see the vector, you see the area of zone, the price reversal zone. So you're seeing all of that at this moment. So you're seeing all of that at this moment right here. Then you see the price makes a push back into the area where the vector is. It stops, and then the very next one around the equal body. Like I said, railroads are usually not perfect on the 1 hour, but around the equal body. And then what happens after that is that it comes down. So let me replay that so you can see it better. Slow it down a little bit. So price, let me just repeat, price was coming up to that area. Railroad was formed. You got vectors, and you have a railroad that forms in the same area. Very good signs. And then from that point, price goes down. Right from that point. So those are things that you can use to confirm it. This one, you see this little break and retest here. This little break and retest here. You see that there's dojis. You got dojis right here. And that was another confirmation of break and retest. You got vectors on the other one and railroads. Those are other confirmations of that zone being stronger, that zone being respected, not breaks and retests, but the zone being respected. So those candlestick patterns are confirmations of the zone that's going to be respected. And then what was the last one that I put up? The last one was, of course, the engulfing candle. So like engulfing candles, you would want to see like from past history. You want to be able to anticipate engulfing candles when you're actually trading. But to look for where an engulfing candle might happen, you want to look for areas where other engulfing candles happen. So if we look at this zone here, I'm marking with the yellow line so you can keep pace with it. So if we're looking at this zone here, the other confirmation is engulfing candles. And I'm gonna just put an asterisk, like a note from past history. So dojis, vectors, railroads are live market confirmations. Engulfing candles are zone confirmations from past history. You can use them in live confirmations. So like, for example, this one right here. If we use the engulfing candle as my confirmation to enter, which isn't bad at all, there's nothing wrong with it. You would enter here, and I'm not going to set them like disregard the risk, but you would enter here and you would target the next zone, which it hit it pretty fast. Like it could serve as a live confirmation, but I like looking for them in past history because depending on how big the engulfing candle is, that might be half of your reward taken away from you. But some people like waiting on the engulfing candles, which is usually a little bit safer, but a less reward. You can kind of choose which way you want to go about that. But you can use that. See, if you would have took it from this engulfing candle here, so you close of that candle. Let me highlight it so you know which one I'm talking about. So the close of this candle is a square. The close of that candle, so it closed in that area. Some people would take that as a trade. Nothing wrong with that. You see how it went straight there, and hit your take profit, whatever you want to do. But back to the past market scenarios. So say if price is here. Say if price is here. And I'm looking to see if there were engulfing candles that happened that came from the zone that I'm looking at. I would look left. And when it comes to engulfing candles, I like looking for engulfing candles that are heading in the same direction as what I'm anticipating. If you're looking for the opposite engulfing candles, what you want that engulfing candle to do is close at that zone. So, because what that tells you is there was a strong push and then something stopped it in this area. So that's how you would use an engulfing candle from an opposite direction to confirm, a trade. Now, but what you want to do is look for engulfing candles in the same direction because those are stronger confirmations. That's how you would do it in the opposite area. So I'm looking for a sell here. Looking for a sell because it broke down. I'm looking for a retest sell. I see that there's an engulfing candle here. Strong one that went down. You had two here. That's the engulfing candle by definition. But I also include strong candles. Me personally, I call these engulfing candles too. But by rule book, textbook definition, this is not an engulfing candle, it's an impulse candle. But the textbook engulfing candle is this one because this body engulfed 1, 2, 3, 4, 5, 6 candles. So 6 hours of work got engulfed by one candle. That's a true engulfing candle. But I see that. I see this one. So I'm seeing all of these engulfing candles. I see this one here. And I even see an engulfing candle in the opposite direction, but it follows my rule for engulfing candle, which means stopping in that zone area. So this is a really strong zone. We got the vectors here. We got the vectors right there. Got dojis. Got dojis. We got, let's see, we even got a little railroad action here. So all of this happening in this zone. Little railroad there. So multiple confirmations of a strong zone. So when you see that, you're at a good potential area to where you can place a trade. But all in all, this is how you do zone-to-zone trading. And just to recap, if you're here, it's breaking, so you're looking for the break and retest there. Like say it didn't break and it's still in this area here, say price was still here, you would just look for that and you would just keep playing that. Like you would just keep doing it. Every pair, every chart, this is your move. So some people can really do this. Now, the only, I guess, downside to this trading style is that you have to be present in the markets when the retest or the correction is happening. Some trades like this, that's 1 hour, 2 hours, 3, 4, 5 hours to catch it. That's 5 hours to catch it. But some, like, what was a quick one? Right here. This was a pretty quick one. This all happened in less than an hour. Doing that. So that happened in less than an hour. That one candle that kind of dipped down into the zone, that was less than 1 hour. So you may have missed that trade, which is fine. You're not going to catch every trade. But that's the only drawback. And here's another quick example. It took less than an hour for it to happen. So the only drawback to this trading style is you may miss it. Now you can negate stuff like this with setting up alerts on your charts, but for the most part, you would have to be present to catch it, which isn't bad. Like, if you get an alert, You know, you check your phone, check your computer, make your move, continue what you're doing. It's not bad. It's not going to kill you, but that's the only drawback. But this is how you trade from zone to zone.